their truck got swept away.
The March 21st meeting.
So moved. Second.
All in favor?
Aye.
Passed. All right. Next up, the treasurer's report.
Good morning. In your packet, if the moment we skip the landscape report and go to the first portrait report, the balance sheet. I was looking at the balance sheet. We're up $633,000 in assets and corresponding liabilities and net equity, primarily due to the additional funds that we've received from the SBA for the loan fund, and also resulting from the increase that we had to absorb because of the new accounting treatment, where you have to value leases. And so that's a corresponding increase and decrease in the balance sheet. Welcome, Brian.
Good morning. Thank you.
We're starting with the balance sheet, which is the second report in the packet. What you see here is beginning at the top of the balance sheet is our bank accounts. And as you can see, 3/4 of the way down, we have total checking and savings accounts of $1,561,000. When you look at that, 735,000 and 271 is funds related to the loan fund. The money is available to lend to the loan fund. So in our operating account, we have $339,000, and we have an account at Bank of Greene County. We call it a reserve account. It's a board-directed reserve account, 215. So we have about $505,000 in work. We've been as high as 750, but I think what I've tried to do is keep 1 year of county support as working capital. We're working with the county now on their 2024 budget and putting in our request. Our request will be the same as last year. When you go below the checking and savings account balances, we do have the 15% of the loan fund, of the SBA loan fund that we have to keep on account. The SBA requires that when they give us a tranche of funding, they gave us $500,000. We need to put $45,000 in a lockbox reserve account for that tranche. And that money has to come from our working capital. So what we've been doing is we've never, when tranches, when people pay down the tranche, it's only 15% on the outstanding balance due to the SBA, and we're paying the SBA back. We don't take money out of there because the next time we ask them for $250,000 or $300,000, we'd have to take that money out of our working capital. And so that's worked well, and based on the approval we have from the SBA to take down over 2 years, $750,000.
775, and we get 3 years.
And we get 3 years. We have already in place the money to ensure that the 15% doesn't have to be moved from reserve cash accounts. As you can see, look to the next page. Our loans receivable, those are the 3 loans at the top of the page with the Creamery, Clock Estates, and Return Brewery that we had to put on the balance sheet when we acted as the intermediary for the county in connection with the loan, funds they received from the Office of Community Renewal, which were lent out to those three entities. That's one of the items a year and a half ago in the 2021 audit that we got dinged on by the accountants for, we had put it in an account. We had not set up an account as a loan. When you look at accounts receivable, they look high. But basically, it's the fourth quarter SBA technical assistance, which you file at the end of June. So Martha is in the process of finalizing that and submitting it, if she hasn't already, to the SBA. And we're happy to say that we were able to draw down from the SBA technical assistance funding. Runs from July 1 to June 30th on the federal grant fiscal year. And we were able to manage that grant in a way that we drew down the entire allocation. The Hudson IDA, we rebuild them. It's $833 a month, and we do bill them quarterly. And when we rebuild the June, when we build the June number, we include a statement because they had paid the previous quarter. Columbia County Broadband, we are meeting with the county, meeting with Matt Morrell today, but also Wednesday on ARPA money. We have spent an additional $21,000 on broadband that we have not yet been reimbursed by the county. Columbia Forward, county pays us quarterly for $42,000, and we're waiting for the next payment there. The housing, Columbia County housing income, the 37.5, they actually spoke with the county controller, and they had not paid us at all. I mean, we knew that. We resubmitted the paperwork, which included the contract and the resolution approving it and the invoice that we had sent. And they have paid that now, so it has been paid. The Columbia County IDA, we're in a situation now where the IDA is basically out of money. We need to do a project in the IDA to be able to get paid for the work we've done this year, which, because they haven't had any projects, has basically been 3 or 4 meetings. There's a cost to, the administrative fee was created to be able to absorb the cost of the meetings and the work that relates to projects. With the city of Hudson, they pay us $833 a month instead of $2,000 a month, but we get 10% of the closing fee up to $10,000. So, we may want to go to a pay-as-you-go version with the county IDA, but right now that's going to be a receivable, and we're going to continue to accrue it. But the IDA is not going to be able to pay us till they get another deal.
Should you reserve against it then?
Yeah.
Okay. So between now and December, if like nothing transpires with the IDA, they're unable to pay, you'll just reserve the full balance. Keep it as receivable, but have that correlating. Okay.
The due from the county, $175,000. They had prepaid us in June. They are on our main contract, which is $460,000 a year. So in June they gave us a check for $230,000, and that was to enable us to have the funding on hand to be able to make the down payment on the land at 11 Warren Street that the county has asked that we get under contract. We did that, and so because we accrued the money that they gave us for their contract through the end of the year, and we used $175,000 of that for a purpose they designated, we showed it that they still owe us that between now and December. What will happen is if they go through with that project, the assignment of the purchase and sale contract to the county from CEDC, the consideration will be $175,000. So, so we're not concerned about it, but we needed to put it someplace to be able to book it. So when you look at the level of receivables, the only concern I have is what happens with the county broadband 21,000 and the IDA 12. And I think the county broadband will come. They still have $1 million. They had allocated $1 million for broadband, and we've only used I think about 100. And there is an ARPA meeting that I'm going to be attending later this week. ARPA is the American Recovery something Act of 2023 or 2021, 2020. When you look at the fact that out of more than half of our balance sheet relates to the loan fund, and what we have here is $1 million. These are the loans that are receivable. Up above, we looked at the cash available to make loans. But right now, we have $1,077,000 outstanding in connection with the CEDC loan fund and $826,000. So we have almost $2 million on the street as it relates to supporting small businesses and ensuring that
About another $1 million available.
about $1 million available. And as we draw down additional monies from the SBA, we will be increasing our volume. Increasing our volume historically has meant that we increase our technical assistance grant. But I do want to address the technical assistance grant later in the meeting. When we, for a moment, you jump back to the back of the, next to the last report. What I tried to do there was just pull out all the loan accounts. So what you see here is cash accounts in the because I have been trying to get the UHY to help reorganize the balance sheet so you can look at this and not have to bounce around to figure out where the money to lend is, where the money owed to the SBA is, and where the money that is on the street is. So what this does is this shows you we have 735 available from the CEDC loan fund. You can see we've got $175,000 more on the street this year than last. It's hard to keep up with the SBA money, but we're $14,000 less on the street than last year. Now I should have put a line because those next two numbers are the money that's on the street, the $1,077,000 and the $826,000. You can see the cash reserve amounts are down below. We have $271,000 in cash, SBA cash reserve, which is our money if everyone pays off. And if you go to the next page, you can see we owe the SBA $943,000. So if you take 943 times 15% is 141, and we have 274 in that reserve account. We have never moved that back into our operating working capital because of the fact that when you draw down an additional 750, you're gonna need 112,000. So we continue to roll that, but if you did get to a point where the entity collapsed, that money would be. So the way the SBA program works is we have 15% of the outstanding of the amount we drew down. And if that was hypothetically $100,000, it'd be $15,000 in the reserve account. And if we made five $20,000 loans, and one of those went bad, we would immediately have to pay the SBA back from that reserve account, and we'd be $5,000 short. We would have to not only move $5,000 from our operating funds to make the SBA whole, we would then have to take $80,000 remaining in that fund and put $15,000 in that fund from our money. So always having that money available in the revolving tranches of the loan fund has been how we've managed that over time. So, what this was recognizing that 2.3 million of the 4.6 million is loan fund related balance and liability. I thought it would be helpful to see it in a context of. Now, when you look at this, if you we've tried to work out, and Steve and Martha and I have been working on taking another look at this, because when I first did it, it was more of a snapshot, it was more of a back of an envelope snapshot. But with 1.9, we have a total portfolio of $3 million, 2.97. If you take what's on the street, what's available to lend from both loan companies. With the CEDC loan fund, it's $1.9 million. And so we have 800. So what I wanted to do is, how much do we have to lend annually for the 10% loss ratio, which we've never had, to stay in business forever, doing 5- and 7-year, 10-year notes, so that we then can have some sales metrics to meet, to be sure that we don't put too much out on the street and we're shut down for a year or so because people aren't paying the money back as fast as we put it out.
Have you done it? You know where?
Yes, it's right now it's $350,000 a year from
In new loan origination.
new loan origination. It was 250, and what did we do last year? 500?
810.
Huh?
810.
810 new loans. Yeah. So but we were behind on the fact that we have 50% available to lend. We are up when we get to the P&L. You'll see that we're budgeting on interest is pretty close. We're just a little bit ahead of where we thought we would be. But
How do you factor in the SBA money? Because you're going to continue to take more now.
right, well, the SBA gives us a grant, and we try to use 25 to 30% of that grant in budgeting to pay for consultants to provide services directly to the customer or client, as opposed to using it all to absorb overhead that they allow us to match the program. And this year we're going from 232,000 to 274, and again, it's driven by the fact that there's the volume of loan. Other than Pursuit, which is a statewide entity owned by 22 banks, to be known as the New York Business Development Corporation, and they are a micro lender. We're the lead micro lender in the Syracuse district. I'm hoping to find how we can get to a list of the ones that are in the New York district, just to see how we compare with some of the larger ones. The concern we have with this is we got a crazy call on a Friday for the day that the House and Senate finally passed the debt ceiling bill, telling us that we needed to get online and accept our allocation of $274,000 from the SBA. Because if we didn't do it by the time the president signed the bill at noon the next day, it would not have been earmarked and we risked losing it. So Martha and I and Jessica, and because of this, and people were getting this notice from the SBA around the country, the computer thing, the fact you couldn't get online. So Martha called several people, and I was out of the office, did the same. And it was what, about 6 o'clock from home, you got online?
Yeah.
And, we saved it by 12 hours, but, what if someone wasn't here that day? Or what if we were, at a conference and we didn't look at our email?
So
So I'm worried.
the craziness of the government is not lost on me in any way, shape, or form. Which is,
But so I'm worried, and I wanted to give it some breathing room. I didn't want to appear to be impetuous, as often I am. But I want to understand which committee of Congress decided that technical assistance was something that could be pulled out. And in fact, was that what was really happening, or was it just the SBA bureaucrats panicking on their own? But I do think we need to know in the next month or so, and I have some names of people at the associations. There's 2 associations that that people who are funded through this program and similar programs are members of, and I have their legislative affair person. And by the end of September, when they get back from vacation, by then I want to know, where do we need to go with Schumer, Gillibrand, Molinaro, and anybody else who will listen. If in fact there's Midwest members of Congress who think this is a wasteful program. Have you heard any more about that?
Not worried.
I'm hoping that it was just somebody saying, well, we don't, just to be safe, let's make everybody click the button before he signs it, so there's no question about it. But I did see something in a week before that we get one of these things every Friday from this association. And I said, well, that could never be our technical assistance that they're talking about, but apparently it was. So we want to get to the bottom of that because, to go. And I also think that because of the Recovery Act grants, they upped us more than we would have, right? We went from 182 to 230, 180, 232 to 274. My guess is they weren't cutting this program out. They were reducing it back to what it was before the pandemic, because they did pump a lot of money into the SBA before the pandemic. So I don't think it will. I just want to understand if there is going to be an adjustment for beginning July 1 of 2024, what that is and the extent that it's significant and might impact us, how we might rally with other similarly situated groups. And the good part about it is it's kind of like the MEP program, the Manufacturers Extension Program, that they'll never get rid of it because there's 335 centers around the country. So there's only 110 congressmen that don't have one. So, but we do have to figure this out because it would significantly impact our budgetary planning for 2024.
just a lot of numbers floating around. So we were talking about the renewal for the next cycle is $700 and something thousand. Is that a
774.
Is that a 3-year cycle?
No, one.
1 year. So what's the 274 that you're talking about having to?
We received from July 1, 2022 to July 1, 2023.
Yeah.
230,000.
Okay.
From July 1 of 23 to June 30th, 24, we're approved and signed up. Everything's documented and signed for 274. So my fear is, what if they cut us back to 180?
But that's a different pool of dollars than you're talking
No,
about, which is
it's the same.
700 and
Oh, the 700 is money they're going to give us to lend. This is money for operations and
technical
technical
assistance.
assistance.
Yep. Okay.
Yeah.
Yeah.
But I could see how it, But I did want to pull out the loan program because it is such a significant portion of what we do. And I'm going to refine this a little bit more. We But let's go back, finish the balance sheet, and then we can take a quick look at the P&L. If you, we were at the accounts receivable, and then we dropped to the loan fund. And then you see that we have our fixed assets have gone up by $198,000, but that was because we had to book the lease. I'm sure there's a section that Brian throw out. Yeah, and that's 232,000.
Can you group that though in QuickBooks a little bit cleaner, just because the actual asset itself is down below 280, 587, and then the amortization of it's a little higher up? Can you just, because it didn't
Again,
actually change by that much, right? Because you don't have the numbers. Okay.
you have to jump around too much.
Yes.
Jumping down to our other assets, we have a $3,200 security deposit on this space. I'm going to trigger, I'm going to ask the board and this committee to approve triggering the 5-year extension of our lease on the same terms with the same 3% escalator. I have to do it by January, but I think I'm going to do it in September.
How long have we been there?
5 years in September.
Like yesterday.
The other deposit is, well, the other is the net of the I'm sorry, the 232 is the value of the land. And the 280 is the right of use. So I confused that. What you see here for allowance for loan loss, this is totally separate from the fact that we have to keep an allowance for the SBA. And we put a $200,000 allowance for the county loan funds as board directed. This is what the accountants make us, if we actually had a loss, this is what they credited against. And so, when you look at this, we've been criticized for having too much here. But again, if you don't have this and you have a loss, it goes against your income that year, where here it gets allocated because we've already moved money over. When we've had a loss or we had a gain, if we had a $100,000 gain, I usually suggest that we put 50 more in here, just to, because it's a not-for-profit. It doesn't matter if you made 50,000 or 100,000. It's just that you didn't lose 10,000. The Commerce Park land receivable nets itself out, but it's still there because there was a value there last year. The grant receivable from Flanders, we forgave that in accordance with its terms, but it hadn't been forgiven last year at this time. The Angelo's distributing grant, they're continuing to pay as if it were a loan, and Steve has advised me that that will be fully paid off in December of 2023. They was working on the budget for next year and didn't want to rely on that income if it wasn't there. On the liability side, Kat and I are trying to figure out why we have a negative $2,800 accounts payable, and get that cleaned up. You can see the deferred money for the county is the 232, which is the money they paid us in advance on our annual contract. We are going to move that down, so it's with the other deferred revenue. We have employee related accrued expenses on our deferred revenue. We're still working with the Berkshire County Foundation on how they would like us to spend the $2,700 that we're carrying there. On the membership fees, the accountants make us only realize 1/12 of a membership fee. So if you joined in April, we only have 8 months. So we're going in every month now and moving over 1/12. The deferred county money for Columbia Forward, you'll remember we're holding that because they paid us early. They paid us 6 months before we got started to work. So we want to be able to use that so that the program actually runs a full 3 years. That's, and there's a second component to the Berkshire Taconic grant. The 3 CBDG grants, those are the ones that we have to put on the books because the accountants say it's an in and out transaction, but they need it to be shown as a loan, an asset and a liability. The deferred Columbia Forward grant, that's they gave us $50,000 to provide 10% grants to qualifying borrowers, up to $25,000 as a kicker for COVID. And we have, based on this, used $21,000 of those funds. So when we make a grant, we move money over from this account to income. The land deposit, that is actually the appraisal for 11 Warren Street that the county will net back to us when we, as part of that transaction that they go for. You can see that I'm paying down. We had a $100,000 EIDL loan. We weren't sure when EIDL was available that the county had already cut us 10%. Everyone got cut. Actually, everyone got 20%. So we went from 460 to 390. And so I convinced the board at that time that if they couldn't restore us back to the 460 before the next full year by having the EIDL money on account, but I did it with the commitment that it would be paid back over 5 years. So we're paying $17.50 a month, and we started paying after the 2-year. It was a 2-year grace period where they accrued the interest, and we have accrued over $6,000 of interest, but that was booked last year. And right now we're down to $91,000. So that'll be fully paid off. And at 2.75%, we were going to come back to the board and suggest that we use it for 5% loans, but that's not what the government really intended. And you don't want to borrow 30-year money and use it for day-to-day functioning. We only owe $410 a month because of the way it was. We're at the not-for-profit 2.75% rate instead of the 3.75, and we're paying off in 5 years versus 30 years. But and you can see the balance of you've got the lease liability, which is the corresponding liability against the lease asset. And then you can see the 943 we owe the SBA. And Entelo distilling loan. And look into the back side. The UHY every year calculates this SBA microloan number. And Martha, I've always questioned what it was.
Long-term deferred.
Yeah, well, the net asset, I'm sorry, under net asset restricted. And I'm going to dig in more into what that is because it had been the same for a long time and it jumped. But as you said, Martha, they do an annual calculation. And I think it's based on the SBA regulations. But we owe them $900,000 and we booked that. So what else do we owe them? So I will look into that more carefully. Any questions? I mean, it's an internal document. It's we're not General Motors, although I bet theirs would be more have more errors in it than ours. But I think it's in reasonably good shape. I've spent considerable time with key banks, Bank of Greene County and Community Bank, And I am estimating, well, $25,000 in bank interest next year. One of the issues we have is because we have set up the SBA tranches for the existing accounts, the only way we could get interest bearing on those accounts is if we close them and open new ones, and that would freak out the SBA. So, we're just going to suck up about $200,000, lose $2,000 by not getting 3% on that money instead. But KeyBank moved our operating account and our to a 4% business model. They've moved several others to it. Community Bank, we bought a $400,000 CD with loan fund money at 3.5%. And a year, 18 months. And we did a calculation as to how much would be coming in from the loan fund. And the flip side is with Bank of King County, they said, well, we'll just give you 2% on everything, because I suggested I wanted to buy a CD at 4. So we're going to have to, but we'll have a report, perhaps by the board meeting, of has everybody brought us up to where we should be. And I'm estimating that we'll have $15,000 total in interest this year. But next year, I'm estimating, because rates could come down, but I'm going to estimate 25,000. And our administrative revenue is on target because it's all accrued, except for grant administration and other, $20,000, or $22,000 off. We have delay in which grant is it? Pine Kill Farm and Return Brewery, where we haven't collected the fee from.
No, on Clydesdale, we're actually going to close that out. So you'll start to see this. Clydesdale, we just received the first check from them, and then we'll have a total of $14,000 in admin, but that's coming to us.
Right, and that comes in July, so it didn't hit this. So that's why this is the 15,000 was a timing issue. But we have others in the pipeline.
We'll have Return Brewery. I don't expect that we'll be doing any more draws for them the next 6 months.
And the other is we have $10,000 coming from the closing on the Depot District Galvin market rate project, and $10,000 from the city IDA coming from the closing on the K&R rehab of the Providence Hall and Skylar Court, from the way our IDA contract is structured with. But we budgeted for that. I had to put it later in the year. Our Columbia County money is down because I had budgeted that we would have been paid more on broadband by now. But we're going to have that conversation tomorrow with the county. Our Columbia County grant program, I had budgeted that we would have made grants of 10,000 by now, and we've only made 10 of 100,000, because people who qualify, they get 10% of their loan as a grant. So, but that money is in reserve to pay for. This grant and loan interest that's the Angelo grant that was really a loan, but it was structured as a grant that we talked about on the balance sheet. You can see our the interest income, that's a separate line. That's the money the government paid us on the employee retention credit delay. And then loan interest, we didn't want to put it in the global loan interest. Interest on the loan fund is up $1,700. So, for the year, it'll probably be up 5,000. Membership and sponsorship, we're not going to make the budget annualized, but as we move the remaining $9,000 over $1,500 a month from the deferred membership, Jessica and I have discussed starting the membership program a little, get it all on the shelf. So we're not scrambling to get it done, and also, identify, some key players for the 2,500 level. Well, we let it slide for COVID because, businesses were dealing with their own issues, or they were supporting social service and community. And next year, we will not budget this high. Our other income is some miscellaneous fees and what have you. Sometimes we charge an application fee or a loan closing fee. Sometimes we charge a late fee. So our income is down $40,000, primarily from membership and from the timing of the IDA, the Office of Community Renewal Grant Administration, and the Columbia County Grant Program. We did have to pay real estate tax, which someone might jump out and say, as a not-for-profit, why did you have to do that? So at the closing on the Route 9H property, you had to do the closing adjustments, and it was easier to pay we weren't a tax exempt entity at the time that it was closed on. So yeah, we agreed that it was just easier. We're up on conference and training, but Jessica and Chris and I and Martha and Steve have been taking advantage of conferences. That also includes web-based conferences and seminars or webinars that we have to pay for. Our consulting fees, general consulting fees, are down. We've always broken out my consulting fee for transparency. Meetings and events, it cost us $1,500 more for the annual meeting. And that was because we brought in professional AV and video so that Dr. Urchel's presentation would be not on a screen that size. And I think that, proposal bill was similar to what it was last time. And the above budget number is almost exactly what we paid the AV consultant for people involved. If we go down to total employee expense, we're down $6,600, which means we're down $12,000 for the year if we keep this pace. We did do annual reviews at the end of the year. Facility, the rent goes up in September. We are going to extend the lease if we get the board approval. Our grant expense is the $5,000 that we granted to Columbia Capital Resource Corporation. Keep that going. And the grant expense is the grants that we make and use the county money, and every expense that we move money over to match the income. Our insurance is back fully in place, and I always over budget because insurance markets are so tight, and especially as you add some of the IT and employee related coverages that are new, but it's still very reasonable. I think it was 5 years ago we went out to bid on the insurance for CEDC and the IDA, and our micro business expense, if you multiply that by 2, would be $60,000, and $60,000 on our $240,000 budgeted SBA money is, you can see how we try to make sure we spend 25 to 30% of the technical assistance money on providing direct services. We're under on housing. We're under on broadband. we had no Columbia Forward expense. And our workforce and education was the $15,000 to the community college for the program that we support there. And the Warren Street appraisal, $3,500. Office expense, we can just, we're under on dues and subscriptions, but that's a timing issue. We're over on the website because just we had to do some extensive upgrades for plugins.
Yeah.
And then we did some minor edits.
Mostly plugin.
And we're up on bank service charges, and we're looking at those with the banks as it relates to the interest expense.
That's for loans, right?
No, that's to be on Key Navigator, that's to be on, because we split the money up, you're paying baseline fees, but we're in discussions with them about that as we talk about the interest rates.
Mike, back to the $3,500 for Warren Street, that's for 11 Warren?
That was
Is that public knowledge, 11 Warren?
I think it's public knowledge in the context of, it's street knowledge.
Well, we've talked about it at the same meeting.
Yeah. Yeah, it's public knowledge. We didn't want to do it, I didn't want to get involved without doing an independent appraisal. And so,
Good.
and so, and as you'll recall, it was, we negotiated using that appraisal. And Chakosky listed the property where the Social Security office is for the same price as the Galvin property. And it's about the same square footage. And they have, but there is a lot there for parking. And we could build a building there if you want. So I think we're pleased that it was. When you net out all of the office expenses, we are over on the computer equipment and leasing, and we are going to go back and figure that out because it may be how we budgeted, but we did. Steve worked with me to get our new copier, and we brought the price down. We did go out to two firms or three. Three. We kept it with the incumbent because he was pennies different than the others, but our miscellaneous expense is $92, and the EIDL interest. Our professional fees are down, but Andy did get us a bill that includes June work. Back to our accounting fee issue. Payroll services are down, and our other professional fees we hadn't budgeted for, but we are over budget $10,000 there. The accounting fees have jumped significantly from 18 to 30,000 2 years ago when we had to add the single audit. And the accounting fees this year, jumped another 20%. I want to have a conversation with them because I think that if they can't guarantee a fee now, we're going to have to go to our. We've had accountants serving on the board who said that that's what it costs and it keeps going up. But I do see when you have something going up that much that it's 25% a year.
So is this your annualized number then? This is for last year's audit, pretty
is
much
our-
in total, so
total.
you won't incur any more costs until you
Unless
get into
I
planning.
call them for some special.
Yep.
But I think that a lot of it is the larger firms you get more depth of service, but you get double billed when the person who's managing your account goes and gets the next person.
Yeah.
I mean, it's not, not saying that it's not valuable and that it's not, there's no padding here. It's just that there's there's more people involved and we're more complicated than we've been. So we are, $27,000 off budget, which is $1,000 better than we had projected based on timing. I'm a little concerned about, if we jump back to the landscape profit and loss by class. Because if you go to the third page there, you see that we're 74,000 bottom line, 317 on an operating basis negative, and the only thing that's carrying us is the loan fund interest. But we never take loan fund interest and pay ourselves an administrative service fee. So we are, over time, that's how we went from $700,000 in operating balances to 550. So, Martha and I and Steve are going to look at what are other loan funds like ours charging. Is it 8% of the amount on the street? Is it 5% of the total? But I do think we wanted over time to build the loan fund to where it was $4 million, and we'll be there when we get the next 750. But remember, the 750 rolls off.
When you do the calculation for remaining perpetual, will you be taking that money out or leaving it?
Well, right now, we leave it.
Right.
So it will affect that calculation. But I do think that, I don't think we're entitled to take all of it. But when you see at the end of the year a consolidated statement that shows we broke even, or we were $10,000 under budget, or negative, or 10,000 over, it's on paper because we're using cash by not out of reserve by not taking funds administrative fee for the long run.
But if I understand correctly, you're generating income from the loan fund. That's money that is otherwise allowable to come to the CEDC as some type of administrative fee. You're reserving the cash,
right?
Setting it aside. Is it true restrictions is a question? Like, is it restricted?
I can't move it.
assets?
I can't move it without coming to the board.
You can't move it. Okay. But you could come to us and say, over time, we've accumulated $300,000 in cash, real money, that's sitting in a board designated fund that we want to transition for operations through an administrative fee that we feel we've earned over time, and it's allowable,
right,
by the SBA and everybody else.
In fact,
and is it allowable as a question? Because that would be my immediate question.
Yeah.
How can you tell me that this is allowable? It's a board restricted asset at this point in time.
Well,
Self-imposed.
it was a self-imposed on the CEDC account.
Did the board do something years ago to restrict these
Yes.
assets?
No, they didn't restrict the loan fund.
Not the loan fund, but the income generated from.
We could go back because it was defederalized community development block grant money. We could trace that back for you.
Yeah.
Yeah. And then on the SBA side, it's our understanding that the interest is ours, right?
It's ours.
And
No questions asked.
no questions asked.
But you're still putting it.
Yeah, but we left it there.
Right. Okay.
So what we do is, we're still loaning under the SBA program long after we paid it back.
We do need their approval to withdraw the funds, but they approve it as long as we show it.
So when we get down to the last person pays in the first tranche, and there's $28,000 in that account, which was all of the interest earned over the 7 years that we had that out. When we close that account, if we paid the SBA back, we don't have to get their permission. It's only why they are still owed under that initial tranche.
And what are you doing with that $28,000 in that example?
I move it to, that's what I use first to pay the 15%. Because if I moved it over, I'd have to put it back.
Understood. Okay,
So-
so that's what you're rolling.
Yeah. So, but when we were, $1.8 million loan fund 10 years ago, the efficiency wasn't there. You had to get it larger, and we didn't need cash. the 200,000 that we board reserved for CEDC, that was just, if we had a big loss in the loan fund and the loan fund was depleted, did we want to put money back into it? Because there was no requirement, there's no SBA requirement that you could run that loan fund until everyone defaulted and close it down. But those are really good questions because someone like the ABO might ask those, and the fiduciaries might ask them.
And I guess the real intention with the line of questioning is if you're drawing down working capital, at some point, you're going to come to the board and say, we want to transition this earned income,
Right.
earned cash over to operations. And then in some way have to justify how you've earned it,
Right.
which sounds like it's not going to be complicated.
No.
But also justify why it's allowable.
Right.
If you've restricted it this whole time.
And then by doing
Even
that,
if it's a self-imposed restriction.
and by
right?
doing that, it's one meeting, not go back and get more information. And what we will do is we'll do that so that we have that information for the next committee meeting of this committee. So that
Would you do 50% or all?
Yeah, so is your timing that you think you're
For next
gonna
year.
wanna,
For next
okay,
I want to see what other people are legitimately charging. And the SBA is paying for administrative support through the grant. But the real theory is if we took this loan fund, if someone else came in and took over the economic development component of CEDC, and you just had a loan fund, how much of the interest are they using to manage to
Right.
to operate the loan?
Right.
right.
It is what we do.
Yeah, so I think we covered an awful lot. I think that we always do. I won't, certainly can't get into this level of detail, obviously. You'll get the board meeting will be in a condensed version. I did want to, point out the risk of the SBA future grant funding, just to get on top of that and to talk about the county issues.
Mike, regarding the county and specifically the IDA, which is not very robust right now, is there anything on the horizon to your knowledge? Or is this a trend happening?
It's a trend because of our lack of infrastructure. Other IDAs are really busy. And because we only have 6 sewer districts, no one was able to build something big enough to have the economy of scale to make it worthwhile, or the project isn't big enough to justify all of the added expenses that come with an IDA project. So, certainly if we've had conversations with 2 businesses that were interested in Flanders. And if someone does something in Flanders, they're not going to do it with an IDA. There's still the possibility of the housing project in Greenport. We're still monitoring that.
Nothing going on.
Small project.
And we have 2 potential small projects.
So
Nothing
we've been
going on.
figuring out from an IDA's perspective is how to make those small projects the cost benefit.
Gotcha.
Nothing
And
going on along the new 966 sewer line.
No. There had been discussion at the corner across, catty corner from the farm supply store.
Yeah.
Behind the garage, the car dealership. That guy did call, but he was having trouble closing. He was from Massachusetts. He bought 30 acres on, it was a Galbauer Road.
Yeah, this one's up against the Ginsburg Solar Farm.
Yeah.
Yep.
And, but we're working with people, but it's just the fact that, we haven't seen the development open up because of the sewer line coming all the way down 66. The issue there is the town of Greenport has to approve any project that wants to hook into that system. But
the Greenport project is still somewhat on.
I think it'll happen. I just don't know who the developer's going to be.
What's going on in the corner of Alien?
That's going to be a maybe storage unit like you see on 90 when you're going toward Rensselaer. He sold that 5-acre parcel separate from the 20-acre parcel that goes back along the stream. But Yeah, obviously, we want to generate enough revenue from the IDA to get them current with CEDC and continue to pass what we're used to. So I have nothing else.
All right, do you want to make a motion? Does anyone have a motion? Any other discussion, actually?
Anyone on the phone?
I'll make a motion to accept the treasurer's report.
All right, second,
Second.
all in favor?
Aye.
Is there any public? There's no public, right? Okay, we have no comment. I'll make a motion to adjourn.
Second.
All in favor?
Aye.
Without objection, so ordered.
I'm sorry, I did not.
Thank you.
Thank you very much.